Friends, in this video for I Thought Wealth, I am going to talk to you on the topic financial assets versus real estate. What should you be investing in right now? Talking to a cross section of friends, even within the financial services industry, I am hearing this often. People are buying apartments, especially those living in Mumbai seem to be very excited about buying apartments to live in. This is true of people in other parts of the country as well. The falling interest rates, the thawing price of real estate, and the high levels of the equity market is moving a lot of people towards real estate. The fact that they have deferred this decision to buy real estate for several years is prompting people to think, why not now? In fact, they have even moved one step further to think, if not now, when? That is what is driving people into buying real estate in a hurry. It is completely an individual centric decision. That's the first thing you need to understand. If a person has not bought real estate for a long time, if he needs it for his consumption, and if he has been waiting for the right time to buy real estate, and if he finds that he is getting very attractive properties at very attractive prices, then that decision is to be taken on its individual merit. There is no real merit in comparing financial assets and real estate and choosing one over the other. Every investor needs both these assets, and you should evaluate the adequacy of each asset class in your overall wealth. If you are already having 3 or 4 apartments already, I don't think that you should be buying a 4th or a 5th apartment right now. It doesn't make sense. On the other hand, if you feel that amongst the apartments that you already own, some of the properties may not interest you in the long run, you could possibly disinvest 1 or 2 and then buy what you want to buy, which you will desire to consume or live in. That is again an individual centric decision. It's not a generic decision. But as an investment, if you already own multiple properties, it does not make sense to add one more property. There are several structural reasons related to the real estate industry which you should consider. First, the real estate industry will go through its deepest reform in the next 3-4 years. The industry has been stalling reform for a long time and resisting it. But I believe that that reform, which is long pending, will happen now. Cities are going to increase their FSIs and they are going to move towards vertical growth. This would mean that real estate prices may actually go in for a long time correction, even after the price correction you are going to see in the near term. So you are not going to miss anything by not hurrying into a purchase decision. Then you will also see that in the event of any sharp reversal in the interest rate cycle, real estate will be the sector that is first affected. So that is again another aspect that you need to consider. Another trend which is happening globally is that with the work from home gaining legitimacy, you are going to see people move from the tier 1 to the tier 2 and the tier 3 cities and still work from there. This would free up a lot of supply in secondary sales in every real estate market, and that pressure will always keep the real estate markets in check. So a number of these trends or shifts in trends are going to impact real estate, and one should be aware of their need and their situation before making this decision, and one should consider all these variables while making a specific purchase decision. On the other hand, I also observe that a lot of people are always underowning financial assets by habit. Because of the fear of financial markets, people have underowned financial assets. If we are going to be bullish on our economy, bouncing back from COVID, and if we are betting that growth will come back over the next 3 or 4 years, one should use this 3 or 4 year period to rebalance his overall asset allocation, to create a better real estate portfolio. Even if you have 3-4 assets already, you should restructure them and only own assets which you like to have over a longer period of time, and use the released capital and incremental savings towards improving your allocation to financial assets. So, it can never be financial assets versus real estate. It should be synergistic between financial assets and real estate. Assume you are a person who is financial assets heavy and you are underowning real estate. It's probably a time for you to take some money from financial assets and buy the real estate asset of your choice, which you would like to live in and give to your family to enjoy a better life. So, to each investor, according to your individual situation, you need to make these choices, you need to tailor your decisions, and you need to move forward. It never is this or that or one over the other. It's always two asset classes, one which you're going to consume over a long period of time and the other which is going to help you live well and beat inflation over a long period of time. You need both and you need to enjoy the fruits of owning both, and you need to prepare both asset classes and ensure that they serve you well over the long term. If you like this video, I would request you to share this video with your friends who would be interested in knowing more about this choice, and I would request you to share and stay on this journey with iThoughtWealth. Thank you.